What is up guys, my name is Ignas, welcome back to the channel. We just recently did an analysis on Alibaba and 2 weeks back they have missed on earnings expectations. But even though they did miss analysts' targets, the company has decent growth and their revenues are increasing. But now I would like to check what the competitor from US is reporting. Last month Amazon had earnings and this is the headline. Amazon badly misses on earnings and revenue gives disappointing fourth quarter guidance. So on top line they brought in $110 billion versus the 111 expected, and on bottom line they brought in $6.12 versus the $8.92 that analysts predicted. And then for the fourth quarter guidance, they expect sales to be between 130 and 140 billion dollars, which would represent between 4 and 12% growth. On the other hand, analysts expected a rise of 13.2% year over year to $142.1 billion. And this seems to be a recurring topic because when they reported second quarter earnings, that was also a miss on revenue and they reduced on the third quarter guidance. I think what is happening recently with these growth e-commerce names is perfectly summed up in this comment that Gary here made 3 months ago. When you expect Mars and you only get to the moon, traders get disappointed. But they forget you still made it to the moon. So for today's comparison I have 3 large e-commerce names. The picks are Amazon, ticker symbol AMZN, Alibaba BABA, and eBay, ticker EBAY. In order to make the comparison possible, we will be looking into 9 different factors: last 4 quarterly earnings results, annual revenue growth, analysts' price targets, forward price to earnings ratio, price to sales ratio, return on equity, cash per share, current ratio, and Superinvestor capital allocation. The best company under each factor will get a point, so it is possible to have from 0 to 9 points, and in the end the stock with the most points will be considered the winner of this comparison. I understand that it could be tough to sit through 10 minutes of analysis, so I will bring the results up front for you to take a look into first. So the results for each factor are in and points are assigned. Amazon got 3 points, Alibaba 5, and eBay 2. This means that with 5 points, Alibaba is considered the winner of this comparison. These are the results, but if you are still interested in how we got here, then continue on with the analysis. First factor are the quarterly earnings results. When a company reports earnings, they are compared to expectations of analysts. So earnings can either beat expectations, meet them, or miss them. We will consider that beating expectations is a +1, meeting +0.5, and missing 0. Then we sum the results up to a minimum of 0 and a maximum of 4, and in the end the stock with the highest sum gets a point for this factor. So these are quarterly earnings for Amazon, and Q4 of 2020 beat expectations, Q1 of 2021 beat, Q2 beat expectations, and Q3 missed. So with 3 beats and 1 miss in quarterly earnings, we get a sum of 3. Quarterly earnings for Alibaba, and Q4 of 2020 beat expectations, Q1 of 2021 missed, Q2 beat expectations, and Q3 missed. So with 2 beats and 2 misses in quarterly earnings, we get a sum of 2. Earnings for eBay, and Q4 of 2020 beat expectations, Q1 of 2021 beat, Q2 beat expectations, and Q3 beat. This means that with 4 beats in quarterly earnings, we get a sum of 4. Results for the last 4 quarterly earnings factor are in the table, and with a sum of 4, eBay gets the first point. Second factor is the annual revenue growth. As investors, we want to find that the revenues of a company are on a steady increase. We will take a look into the revenues of the 4 most recent years and compare them one by one. If revenue was on the increase from one year to the next, we will consider it as a +1, and if it was on the decrease, it will be a +0. Then we sum the results up to a minimum of 0 and a maximum of 3, and in the end the stock with the highest sum gets a point for this factor. So these are annual revenues for Amazon, and going into 2018 there was an increase to $232 billion US, then into 2019 we had another increase to $280 billion, and into 2020 there was another increase to $386 billion. So with 3 increases in annual revenues, we get a sum of 3. Annual revenues for Alibaba, and going into 2019 there was an increase to 376 billion yuan, then into 2020 there was another increase to 509 billion, and into 2021 we had an increase to 717 billion yuan. So with 3 increases in annual revenues, we again get a sum of 3. Annual revenues for eBay, and going into 2018 there was a decrease to 8.65 billion US, then into 2019 we had another decrease to 8.64 billion, and into 2020 there was an increase to $10.27 billion. factors. So with 2 decreases and 1 increase in annual revenues, we get a sum of 1. Results for the annual revenue growth factor are in the table, and with equal sums of 3, both Amazon and Alibaba each gets a point. Factor number 3 are the analysts' price targets. As potential investors, we want to find that the current share price is below the average analyst price target. If the current price is under the average, we will consider the stock as undervalued, and in the end the company with share price is furthest away from the average analyst target to the lower side gets a point for this factor. So for Alibaba we have 51 price target of analysts. They range from the lows of $2,700 to $5,000. The average is at $4,068.37, and the current price is at $3,567.62. This means that there is still around 40% of room for the current price to reach the average target of analysts. For Alibaba we have 48 price targets of analysts. They range from the lows of $129 to the highs of $314 per share. The average is at $213.92, and the current share price is at $131.93. So there is still around 62.1% of room for the current price to reach the average target of analysts. For eBay we have 26 price targets of analysts. They range from the lows of 63 to the highs of $91 per share. The average is at $77.76, and the current price is at $70.16. So there is still around 10.8% of room for the current price to reach the average target of analysts. Results for the analysts' price targets factor are in the table, and with most room for growth, Alibaba gets another point. Next factor is the forward price to earnings ratio. It is calculated by taking the current share price and dividing it by the estimated future earnings per share. This is the standard price to earnings calculation, with the difference that earnings here are predicted by analysts. So in the end, the stock with the lowest forward price to earnings ratio gets a point for this factor. Amazon has forward price to earnings at 54.64. Forward price to earnings for Alibaba is at 15.9. And eBay has the forward price to earnings at 16.13. Forward price to earnings ratios are in the table, and with the lowest value, Alibaba gets another point. Next is price to sales. It is calculated by taking the company's market cap and dividing it by the trailing 12 months worth of sales. The formula suggests to be looking for a company with a low market cap and a high result in sales. So in the end, the stock with the lowest price to sales ratio gets a point for this factor. Amazon has the price to sales at 3.93. Price to sales for Alibaba is at 2.88. And eBay has the price to sales at 4.24. Price to sales ratios are in the table, and with the lowest result, Alibaba gets another point. Factor number 6 is return on equity. The percentage here shows if the company is managed well and if money from investors are handled efficiently. So in the end, the stock with the highest return on equity percentage gets a point for this factor. Amazon has a return on equity at 25.83%. Return on equity for Alibaba is at 11.25%. And eBay has the return on equity at 28.45%. Return on equity percentages are in the table, and with the highest value, a point goes to eBay. Factor number 7 is the cash per share. It is calculated by taking the total amount of cash and dividing it by the shares outstanding. The ratio shows the company's ability to reinvest and expand, or buy back shares and pay dividends. So in the end, the stock with the highest cash per share ratio gets a point for this factor. Amazon has the cash per share at 155.75. Cash per share for Alibaba is at 170.38. If we take into account that those were in yuan, then for dollars it should be at 26.67. And for eBay, the cash per share is at 23.26. Cash per share ratios are in the table, and with the highest value, a point to Amazon. Factor number 8 is the current ratio. It is calculated by taking the current assets and dividing them by the current liabilities. As investors, we want to find that the company is able to cover its debts with assets, but also that they are still actually being leveraged. So in the end, the stock with the highest current ratio under 3 gets a point for this factor. Amazon has the current ratio at 1.12. Current ratio for Alibaba is at 1.64, and for eBay the current ratio is at 3.35. Current ratios are in the table, and with the highest value under 3, a point goes to Alibaba. The last factor is Superinvestor capital allocation. We'll take a look how many shares are Superinvestors holding and calculate the amount of capital that they hold in each name. That way we'll find which one is held the most, and in the end the largest allocation sum will get a point for this factor. I've made the the calculation in Excel, and for Amazon, super investors are currently holding 2,915,511 shares. At the current price of $3,576.43 per share, in total they are holding $10,426 million. These are here the super investors who are holding Alibaba, and the quick Excel calculation suggests that they are holding 2,618,559 shares. At the current price of $131.96, that is capital of $345 million US. And it looks like eBay is the least favorite among super investors, where they are now holding 220,417 shares. At the current price of $70.80 per share, that is a capital of $15,605,000. Results for the super investor capital are in the table, and with most money in, Amazon gets another point. We can calculate the results, so Amazon has 3 points, Alibaba 5, and eBay 2. This means that with 5 points, Alibaba is considered the winner of this comparison. So that was it. If you got value or new ideas, then make sure to push that thumbs up, it helps the channel a lot. Which e-commerce name do you prefer, one of those 3 or something else entirely? Share your best pick in a comment below. If you are interested to know exactly when I buy or sell any stock, then consider memberships. By becoming a member, you will get access to Discord, where I share my stock watchlist and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. This week I did a stock analysis on Alibaba, so if you are interested in that one, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.